Welcome, everybody. It's Jeffrey Scott. It is about 8 o'clock on Sunday, October 7th, and welcome to my weekly broadcast. Thanks to those that joined me live on Tuesday night when I broadcast on behalf of HighGrowthStockInvestor.com. And I anticipate continuing to do these over the weekend, hopefully earlier on Sunday, so you can watch them on Sunday night if you so desire. And then once a month, I'll do something live where people can phone in, ask questions, tell me I'm an idiot, whatever. But anyways, thanks again for joining. Up here is the usual slide deck that I like to use to get started. And so without further ado, let's move forward. Disclaimer, this is for educational purposes only. Any recommendations in the spirit of education, not investment advice. I'm a doctor, not a broker. Most physicians lose money with their investments and just take that for a word of advice. And I'm not affiliated with any software vendor or trading company. The tools that I demonstrate are those that I use in my daily trading. I have paid for all the tools that I will be demonstrating, so I feel that I have bias in the things that I like, but I'm not being paid to be biased. As you may have noticed, before I flip to the PowerPoint, there are a lot of things on my screen. There are certain things that I cannot live without. I need something to trade with, so I use both TradeStation and Thinkorswim. If you're just getting started, I would recommend Thinkorswim because it's a much lower cost, i.e. free platform. If you have been trading for a long time like I have, then you may have a substantial collection of programs that have been made for you in TradeStation, and it's difficult to walk away from things that you paid a lot of money for, and B, you use they're not in Thinkorswim. You need something to analyze. Now, there's a lot of things you can use on the web. There's no question. Finviz.com is one of my favorite sites. But High Growth Stock Investor is what I use for my aftermarket analysis and, frankly, my end of day. And when I want to look at daily charts, charting tool because it's the best charting tool that I have. EdgeRater and ETF Bandit by Chris White are some excellent, I won't say add-ons, but they're tools that add to my analysis ability. ETF Bandit, adopting a lot of Larry Connor's philosophies and picking when and which ETFs to buy and sell. EdgeRater, a great tool for back testing things that you might want to do in HGSI, as well as for helping to understand the status of the market. Seasonal analysis, I use a lot of Magenta Trader, which I may or may not get to today. This will be one of those hour-long sessions. Then I'm a big fan of Ian Woodward and Ron Brown, Woodward and Brown Investing, monthly newsletter, weekend reviews. I didn't see one this week. Daily market updates from Ron and Ian's blog, which he did put one out there today. I've had a lot of influences, and I always like to give kudos because much of what I'm going to talk about tonight are not things that I've created, but things that have helped create my techniques. Ian and Ron, two pictures here. I'll mention their upcoming meeting in a second, are just great teachers and thought leaders today in technical analysis. Alexander Elder, 3 wonderful books. William O'Neill, How to Make Money in Stocks. Gil Morales, Chris Katcher, taking O'Neill to the next level. If you believe in the concept of effective volume or the big money, Pascal Williams' book, Van Tharp, position sizing and stop loss, protecting yourself. Ronald Gronke, excellent, easy readability about creating income during retirement, about covered calls and naked puts. And then Bigelow is the one I learned how to do candlesticks from. If you don't know these websites, you're welcome to freeze it here and take a look. The one person that unfortunately we've lost of late is Dave Elliott, who still has a lot of his websites up, webinars at chartsandschat.com, First Wave Traders. He passed away earlier this year. I will mention stocks that I might consider for my buy list. All that means is at 8:06 on Sunday night, before the market has opened and before I have a clue as to what happens overnight, these are things that look interesting to me. And also, all that it means is that these are things that I will be considering when the market opens tomorrow as I try and decide what I'm going to do. Market direction is the most important thing in what I'm picking for my stocks. The sector second, and then lastly, the individual stocks. And to me, that's top-down investing. The last bullet point is I use a lot of tools to help me pull the trigger and make decisions. And I highly recommend MarketGauge.com and Never Lost Trading. MarketGauge with a lot of setups for TradeStation and Never Lost Trading as some education and some tools for Thinkorswim. As usual, this is the agenda. I will look at the market first, probably spend most of the time talking about the market. Then we'll dive into sectors, stocks, potentially shortcuts, and maybe look at some other programs. On my live meetings, I take a lot of requests, and if anybody emails me during the week to look at stocks or over the weekend, I'm happy to do that as well. I do mention several times that please invite your friends. It comes in spurts as far as number of people viewing these. I have them on a number of different sites, and as long as I continue to have a decent number of people taking their time to watch my webinars, and I'll continue giving them. If that number drops too low, then I'll stop. So for now, I'm still involved. And if you like what you see, please tell people about it. Put it on your boards because, as I say, it's no cost to participate. And as long as there's interest, I'll keep doing it. Here's Ian on the left, Ron on the right. And just if you've never been to one of their live programs, they make me look like an amateur. I am an amateur. I'm not a pro. I'm an amateur like most of you. But these guys are just great from the podium, great speakers, great ideas. And our live meeting, as you can see, is October 27th through 29th in 2012, so just 3 weeks away. And they've telegraphed it pretty loud that this will probably be the last one that they do together. It's kind of like the Beatles breaking up. When they're gone, and there'll be a lot of imitators, but no one's going to be the same. The website, highgrowthstock.com, as I've said before, I'm not paid to do this. I pay for my software. But that's the site of the program that I use. They'll give a free trial without a credit card. Ron Brown's weekly reports are hidden under the report button here. And Ian's blog is right next to that. Highly recommend it. We're going to start by looking at where the market is. And I could have just replayed the last 3 or 4 weeks. The market is the market. It's sort of, to me, stuck where an uncertainty is. I can't. My guess is it's going to take a fall before we get into a Christmas rally if we get one. We've got an election coming up. But frankly, I keep thinking we're oversold, or overbought rather, keep thinking we need to correct, but we don't correct. So I keep saying this every week, and it's still the same thing. We're sort of living in this land here where we get pretty quick pullbacks and rises to between resistance and support, sort of a Darvas box, and I'm not sure anything has changed yet. If I had to handicap, I would bet we break to the low. But I'm not a handicapper, and I have to play the market that I have. And right now, we remain in a market that is slowly going up, as we'll see when we look at some of the charts, but one that does remain at high risk with a lot of negative divergences. If I have time to show you some of those today, I will. Lastly, on the website are a number of other webinars and other things that you can download under the Learning Center. I've got a whole pile of them, as do Ian and Ron and others. So on that note, we'll move on to the slides, or to the charts. Be your own guru. Make sure you have the right tools. Continue your education. And as I've said already, trade the market we have, not the one you think we should have. I've thought that this thing was ready to top for quite some time, and it keeps going higher, although not at a very fast pace, but higher is higher. So let me flip out of this and see what we can see. I was going to go to the Commitment of Traders report, but I was having a difficult time running it on this machine. I have 2 logins for TradeStation, and one of them is a beta testing one. This is a later version. I'm not sure if it's a problem with the version, but when I run it, I've got my other machine right next to it. It looks the same, which is meaning the blue is buying, or the professionals, the non-individuals, the bigger money, hedge funds are buying the market. And so that would be one signal that we may still have some room to go in this market. But let's take a look at the charts and make some decisions that way. So everybody knows what I like to do. I like to go into the warehouse view. I like to go down to Woodward and Brown groups. I like to go into Major Markets Plus and look at a top-down analysis, which is giving me a view of the stock market, but it's giving me a relatively balanced view going back a number of weeks, and heavily weighted to 1 week, and then a little bit less to 2 weeks, and a little bit less to 5 days. But it's all technical, and it's all about price movement. If you look and see where the strength in this market has been, and you can see how little movement it is. If you look at the highest, 3.1% in the Dow Jones transports for Dow theory folks, that has to make them happy because transports have clearly been lagging. Volatility continues to be the weakness. This week, I think there was a little bit of the dollar stuck its head up a little bit, but you could see some of the commodities pull back, I guess, more sluggishness of the market over the last 5 days. Strength of the market is the NYSE. The NYSE is a balance between big stocks and little stocks. It's a large index. Just for those who've not been here before, up here we just call this my momentum bands. Green is better than red. I'm going to close the one that's more experimental. And the one in the middle is accumulation and distribution. Green's also better than red. So I like to see green up here as much as I can. This little guy here is Ian's secret weapon. It's called a high jump bar. And you'll notice that whenever the high jump bar gets to the highest it's been, the market pulls back. So you want to always see where the current line is in regards to how high it gets. Same thing on the bottom when it hits the lowest low. And I look at the high jump bar as a rubber band that when I pull it too far, it's either going to break or it's going to I'm going to let go and it's going to snap back. And these are the extremes. You calculate the high jump by taking the price, and you calculate the difference between the price and in this chart, the 17-day moving average, which is in green, the 50-day moving average, which is in blue, and the 200-day moving average, which is in red. You add it together, you plot it, and the scale looks at the highest high in the past. So you could see this is where the highest high was, and we've certainly got some room to go before we hit that. Down here, pocket pivots up are in blue, pocket pivots down are in pink. These are some trend lines. Ignore those for right now. As I said before, 17 is green, 50 is blue, and the 200 simple is red. 8-day exponential is purple. I may or may not define these, but these are called kahunas. These are other momentum indicators that HGSI users have learned. Both of these are volume bands. Why do I have two? Because sometimes it's hard to see them underneath the blue, and therefore I like to have a second copy. In the middle here, you'll notice some greens and sometimes some burgundies. Those are eurekas. Those are our follow-through indicator. And if I see one in an appropriate place, I'll tell you what I'm looking at. So this is the NYSE, and kind of not much different than it was on Tuesday. I predicted it would come down around the bottom, and then if it holds here, which it looks like it's hold, it could run right back up to the top. And when it breaks through these rising trend lines or rising support, then this is when I'll get nervous. So this is what I mean by a soft move up and moving within these trend lines. NYSE still heading up and has moved up since our Tuesday webinar, Wednesday, Thursday, Friday. But as I've said before, certainly I'm among others that feel that this market is ripe for a correction, but we don't see it yet. Gasoline futures also have been doing very, very well. I think I remember watching the news. There's plenty of oil, but there's not plenty of refinery space. That we have a number of refineries that are being changed over the winter. Some are going through normal repairs, and I believe there was a refinery fire. When I was out in California, the news was talking about gas shortages and big price increases and big swings in price. As we said, transports had a good week. Gold has been in a nice uptrend, as we'll see here, up, getting near the top of its high jump, and certainly starting to look like it's topping. Gold is tied to, as the economy gets better, the euro goes up, the dollar goes down, and gold goes up. And when we get bouts of thinking the economy is going to roll over or the world economy is dying, then the gold will pull back. So I think it's very much remains news-driven, and I believe it is looks like it's starting to top. But again, that other option is it's just pausing to refresh, and going sideways, catching up to its moving averages can be a nice thing to launch again as well. Most indicators, the momentum indicators are green. It is near the top, higher top part of the high jump indicator. Go back into my warehouse view. If we look at big stocks, the S&P 500, again, you'll see the same pattern, and these trend lines have been written for weeks. It pulled down to the bottom trend line, and unlike in the past, it's had a pretty abrupt move off that trend line. It's got kind of a rounded bottom. It threw a long-legged doji on Friday, period of indecision. And when I looked at this on Tuesday, I thought that we did have some short-term risk down to the 50-day moving average. Longer, a bigger pullback might take us to the 200, but as long as we're confined within my trend lines, I'm probably going to continue to hold on before I make any changes in what I've done. And see what else. I also look at the NASDAQ composite. Broken record time, as you could see, in a gentle uptrend. And if I wanted to put in some trend lines, and as I always like to joke, I'm not that good at putting in trend lines. I wasn't good at coloring in school either. And I guess I'd put it to the low before the most recent high. And just like everything else, we are range bound within those trend lines. But a break below them, we do have support pretty much 70 points away at the 50. If we go down to the 200, it will be painful. And I will point out some examples when I look at stocks and sectors of how well the moving averages work. I've done that on prior meetings. And I'm a big fan of moving averages, and both as a source of support, and then later on they become resistance when a stock knifes through, or the other way around, which is obviously better if you're the long. I also like to look at the S&P 1500, and the reason for that is simple. It's got the 500, the big stocks, the 600, the small stocks, and the 400, the medium stocks. So again, these are older trend lines that I wrote that continue to extend, and the same story is there. We are tracking up the bottom trend line. For us to break through any of these indices, all it's going to take is some bad news and some fear coming into the market. And if that happens, I do think we pull down at first to the 50-day moving average and hope that it holds there. That said, without that news, and if we continue where we've been, we will continue to be range bound and potentially move back up to the top of the channel. Anything else that I want to look at in this list? Maybe take a quick look at oil and then volatility, and let's move into sectors. Oil had a rough week, although this is a USO, and you can see where this 200-day moving average on the USO has been resistance, and oil is weaker than any of the indices that I showed you, which is kind of interesting because the price of oil is still pretty high. You can see all the momentum indicators have been red ever since it failed at the 200-day moving average. Oil is not a place where I think I'd be long right now, although there were a few energy stocks that showed up on some of my analysis this weekend. And this is the kind of thing like gold that will be news driven. And as much as I'm not bullish looking at this chart, something that's in a downtrend below the 200-day moving average, I also know that one bomb over the nukes from Israel or the U.S. and Iran, and the price of oil could go up to $150 or more. So hard to be a big oil bear with the craziness going on with that nuclear program. So I've now got my sense of the market. We don't all have to agree. My sense is that we'll continue to go up slowly until we stop. I don't know when we're going to stop, so I'm going to continue thinking we're going up slowly. If we look at some of the elder indicators, and I don't, on the free feed that I get for this beta version, they don't give you all the futures for free, which is interesting since I get them on my regular version. But you can see in the S&P 500 futures, ESD, the dailies, that despite the fact I had some potentially negative things to say about my thoughts of what this market would do, is we continue to run up in a trend. And this is the daily. You notice Elder has painted it green, which means you can buy or be long. The weekly, which is blue, and the monthly, which is green, all of which are still pointing up. All that said, I think that there is great risk to this market, and you'll see in a little while some of my concern with some of the divergences. I can't tell if we got to the high there, but one thing I could show you is the MACD is certainly lagging as we're trying, almost made a new high here, and the MACD didn't even turn positive. So some of the pressure, some of that bullish pressure has certainly abated in this market. More reason why I think that this market is likely to give us a pause before it goes higher. Now, sideways is okay. It doesn't have to be a substantial drop. Let's just take a look at the NASDAQ, and we see green, we see blue, we see green, the same period pattern. Here you can tell there's been a little bit more of a pullback, but it's still within its channel going up and still potentially a viable indice. So this hasn't changed my mind at all. I still am concerned. I am going to load something while we're talking so I can go back and look at some of these divergences. So let me pull up my stock finder. One thing that really disappoints me is Warden apparently is no longer supporting stock finder. I guess the new version of TC 2000 version 12.2 incorporates a lot of the same stuff. But I found this just to be a very simple program for making my own indicators or my own scans and searches. Why would I say it's different than HGSI, you might ask? Mostly because I don't, HGSI, I'm scanning both technical and fundamental indicators. In Stock Finder, I'm able to look at a chart, find something I like, crossovers or something like that, and very quickly with cut and pasting and dragging, I can create some visual scans on the charts. Just a different way of doing things. So once I've looked at the markets and got my sense of what the market is doing, not that I was very clear about that because I think it's about as clear as mud, I like to look at the industry groups. Now, as I always say, I live predominantly in three different views. A view is a combination of a filter that defines what's in my picture and combo, which ranks it. The top-down analysis is all technical, but it's more than just the last couple of days. It really shows over the last several weeks what's been moving, and no shocker here. I could have told you many of these without doing this. Home building, leads, and there's a lot of ping pong, or yeah, I guess ping pong action is what Kramer calls it, on home building this week, and I'll show you some of the things that I came up. A lot of things that go along with home building, home furnishing, carpets, rugs, floors, biotech and pharma remain strong. But this is going over a lengthy period of time, refiners, et cetera. If I want to know what's happening right now, I'm going to look at a 2-day force. So what I should have pointed out, just to look at strength in the market, is we have 142 sectors. If I look at who's got force up, I've got 68. If I look at who's got force down, I got 27. So still a little bit in favor of longs, but not as overwhelming as it's been a couple of weeks ago. As just an aside, people who've been on this before know that I like to use Edge Rater, and I thought I left Edge Rater up. Let me pull Edge Rater up real quick. No, I took it down. And one of the things I use Edge Rater for is to divide up what we call the buckets. We start with bucket number 1 being below the lower Bollinger Band. Then we break up the distance between the two Bollinger Bands into 10 times 10%. And then we have go above it, which would be the 12th band. So 1, 10, and 1. And in a powerful market, 80% of the market will be above the midline on the Bollinger Bands. When you get way too many stocks above or below the Bollinger Bands is when you start to get nervous that the market is topping. So let me just take a quick look here. Put S&P 1500 list in, buckets, and run. And what you're going to see, and Woody had it in his blog, is you couldn't be more neutral as far as the market goes, or more where it can go either way. And it's 50-50. Now, certainly there is a lot of stuff sitting below the midline, and only 7% of the stocks are above the upper Bollinger Band, and 2 or 3% are below. Now, one thing that I guess fits with this picture here is there are some stocks that have just been tears of running well, Sherwin-Williams, some of the home builders that had pulled back, Home Depot, and they're running again, and it's probably there in that bucket are some of the stocks that are living at the top of that Bollinger Band, or above the top of the Bollinger Band. So let's go back into warehouse. Yeah, hold on a sec, Jeffrey. Let's go back. Let's go look at Stock Finder. So what I've done here is, I'm going to put the telechart. What do I want to look at? Components. Let's look at the S&P. I don't know if they have the 1500 here. Let's see. Right, they don't use the S&P. So let's look at the Russell 3000. And let's take a look in the Russell 3000, how many bullish divergences and how many bearish divergences they have. It'll take a few seconds to run. So we'll come back to that and just get an idea of the bulls versus the bears, because bearish divergences often are a sign of a topping stock and a stock that needs to pull back. So we'll run that scan in the background. Let's go back into our industry groups and let's look at some of the positive industry groups to see if there's anything we want to buy. So Force Index, for those that haven't been on my webinars and haven't read elder stuff, and I apologize for the moaning in the background. My dog doesn't like me ignoring him. Force Index equals volume today times close today minus close yesterday plotted. We look at a 2-day and a 13-day exponential moving average. John Sarkit's written some rules of how he trades with it. And what I'm looking at here is just a simple 2-day EMA of the force. Tell me what's moving the most in the specific direction. Now, since volume is included, anytime the major banks are up, they're at the top of the list, and you'll see why when I go into them. So change the index group, and let's just look at the best one historically, which is JP Morgan. And if you can look at JP Morgan, it continues its slow, lazy up. We talked about buying it here, because I thought it was a very low-risk buy coming off a squeeze here, several of the moving averages. With the kahuna, it continues in a slow move up. And the reason why this is going to be at the top is there's 23 million shares traded. So even with little movement in the stock, it has a pretty substantial force. Now, it was down on Friday, but it was up a lot more on Thursday than it was down Friday. So when you add them together, you get 2 days. That's a very big positive number. So if you're a fan of the banks and want to get into the banks, still probably very viable here, and has been, financials have been doing well in the market. A pocket pivot down for the week here, whatever that means, but you can see a nice little uptrend from a low about 31 up to about 42 where it's at today. This is in the last 3 months, 41, 32, that's about $9. So about 25, 30% move. So banks have been strong. They're always at the top, but they're driven not necessarily by price change. They're driven by the volume. What else is going to be at the top? Home builders. Last time when we had this call, I said they would pull back and they're going to run again. And I don't know if that was Tuesday or if that was Sunday. They pull back and they're running again. And whoops, get back here, Mr. Chart. And you could see, we'll look at several. Here's Lennar. These guys pulled back and sort of gave a pause here right at the 17-day moving average. And then Wednesday after our webinar, I guess everybody I said to buy them, bought them, just kidding. He had a big kahuna on volume come in and a move up. Everything's green there. Pulte Group, this kind of looks identical, pull back, came up on Wednesday, Thursday, Friday, pull back, now leading the market again. The index looks just like the major stocks. So home building remains strong. Here's some of the groups in the home builders. And you can look at 5-day prices, extremely big movers, not as big on Friday, but over the last 5 days, these stocks have really outperformed. They are still the leaders in this market. Pharma, I think a different story. Let me go back for a sec. One of the things I really like about the home builders, if it's real, and it looks real, is we must be having some kind of a recovery here because, let's take a look, let's drop down some earnings. Whoops, not what I wanted. Let's go away. Thank you. Could be earnings per share growth. As you look through the market, one of the things that was pretty apparent to me is we don't have a lot of earnings growth in a lot of sectors right now. It's not a big surprise, the economy sort of sucking wind. But when you look at these home builders, I'll just go through a couple of them. You see, that's an index, huge earnings per share growth. So home builders, from an earnings perspective, really suggesting that the housing has turned around, and perhaps the market is leading up, and then leading the economy, and that soon we'll see that it truly has turned. Pharma has not moved up as much because of earnings, and you're going to see pharma earnings are kind of lousy. Comparatively, here's Abbott, Tidler growing less than 10% per quarter. The reason why I believe that the pharma stocks are up near the top is they are a safe haven in times of fear, but they're all paying a dividend, 2.8% on Abbott. Pfizer's paying at 3.4%, and these stocks have moved up nicely. The problem is, as you look at these stocks, is there just isn't much earnings per share, and I guess from a value perspective, their dividends are driving a lot of interest. Where I'm typically a growth investor, I think there's a number of people that are interested in these stocks because of their dividends. You can go down the list, J&J also having a nice run, and the same thing, no earnings growth, 3.5% dividend. If you think about it, if you're retired and you have money in the bank earning 0.25% or less, and you could stick it into a relatively safe company like Abbott and get a return of 3% or more, that's why these stocks, I believe, are moving. And I guess they'll continue to move as a safe haven. Anything in there that jumps out? One of the ones that's been my favorite, that, as I mentioned on Tuesday, I keep a list of stocks that I buy when the market gets trashed. And this has been a big leader, Watson Pharmaceuticals. It's clearly expensive, although it's nowhere near the top of its high jump bar. Had a pocket pivot on Friday. Everything is green. Also slowing down earnings. But this is one that's been a leader for quite some time. And if you can ever get a chance to buy it on sale because the market has a bad day, I would jump on it. And it continues to be a very attractive stock, although not a cheap stock by any means. Going back, biotech, those who've been on this call know that this is the industry that I come from, and I know many of these stocks because I've had the opportunity of dealing with them. There's a mixture in this group. There are stocks with earnings per share growth like Celgene, which I think is the best of the biotechs right now, which for purposes of honesty, I actually have a substantial position in. And then you got some others that I think are interesting stories. At the top of the list is Onyx. Now, one thing with these biotechs is you got to look at, if you put in $10,000 into a position, you're going to get 110 shares. If you put $10,000 into a $20 stock, you're going to get 500 shares. And I don't think on some of these I look at the stock price anymore. I also don't look at the earnings. These are stories. This guy just got 2 drugs approved, one for myeloma, one for colon cancer, both of which will probably be blockbusters. And it trades at a valuation of $5.8 billion. That means somebody could buy this company for probably $9 billion. And that's something that a lot of the big pharmas are doing right now. There's been a lot of M&A here. And also things like Amgen or Celgene, if they were looking to get some growth in a pipeline, might look at buying somebody like Onyx. So they have one of their launches in their existing drug Nexavar are partnered with Bayer. So there's been many people over the last couple of years saying that Bayer would buy them. And I still think Bayer might buy them, but they're growing. Their product portfolio is very exciting. And if you look at their price from a market cap perspective, they're cheap. They need to split their stock and make it look like it's less expensive. Might be one way of fixing that. Like this stock a lot. Celgene, as I mentioned, is one of my favorites, and you could see why after pulling back to, I believe, 58 intraday, give or take back here. Let's see what it was. I remember this day well. 58.53, closed at right under 80. closed at $80.29. Probably is worth $85 to $90 a share. It's got earnings per share growth. You did not see this on the big pharmas, did you? Nope. It trades about what its multiple is, which is kind of low. Usually it trades a couple of times, or could trade up to 2 times its growth rate. Doesn't pay a dividend. As you can see, this one's closer to $35 billion in market cap. So those others are just tiddlers that somebody could sweep up, and this is one that somebody could purchase as well, although I doubt it. More likely to get purchased or to be a purchaser is Amgen, and I mean I'm obviously a very bullish-looking chart. You could see how this 50-day moving average has on several times been great support, and we call that in high-growth stock land free parking, which means it's a great place to buy stocks at when they pull back. If you look at a market cap on Amgen, $67 billion, it pays a small dividend. So those of us in the industry like to say that this one's becoming like big pharma, which is good and bad depending on what perspective you look at. You notice all my momentum indicators have turned green, and it looks like it wants to run again. I don't think their pipeline is necessarily short-term as exciting as some of the others, and I would look for them to potentially be an acquirer, but they've got some mainline products, Prolia, Xgeva, Neulasta, Neupogen, Aranesp, that are just all very big franchises on their own and a great company. Anything else here I want to point out before I move on? This guy's been on the board a couple of times, and I stayed quiet. Ghilardi said stay away from it, and I listened to Ghilardi. Now, the truth is I own a fairly big piece of this, but this is one of those biotechs that I bought when it was a small single-digit stock. And if you look at this in a weekly, you could see it was living at about $5 or $6 until February this year when it had a run up, and it's moved up ever since. And they make a competitor to an Amgen drug. It's on the market. It's got a licensing deal with Takeda, which is a Japanese company. It's got a great management team. I'm shocked a little bit as to how far it's run. It really hasn't had a pullback since this run has begun, and I continue to be long this stock, trailing the stop up a little bit above that 17-day moving average. But I'm not sure this would be the first one I would buy. I think the Onyx is very attractive as one of them. You see a couple others that I like. Medivation had a split, become a little more affordable. Insight, a lot of people like. It's been pulled back pretty far. Here's Medivation. Here's what these guys can do. And this is a stock that, see if I can make it look a little bit more stuff here with a weekly. They just had a new prostate cancer drug, and they released a press release back here in 2011 that said they had positive results. And you can see what happens once you do that, 18 up to 55 in less than a year. So I like these little biotechs. I like to keep a number in my portfolio. I like to catch them when they're young and hope that they get approvals. But they also have a high risk of blowing up if their drugs get denied. So the ones that I put in your short list would be Ariad, Onyx, Medivation, Pharmacyclics, as all companies that have an interesting pipeline, all of which have recent approvals or potential approvals, in stocks that are potential to pop. Obviously no guarantees, but if they get approvals, you're likely to see them go up. And then Alkermes, I don't know much about these guys, and if Ghilardi was on, I would ask him about them. Alkermes is doing that thing that I find is sort of a good time to buy a stock, is when it goes from a perennial money loser or a drug development and licensing company to having earnings. Now, I believe these earnings are from products coming to market, not from just licensing deals. Yeah, 2 commercial products, the first only long-acting antipsychotic, and I'm kind of intrigued here because of the earnings per share growth that's come into this stock. It trades at a multiple of nothing because it still loses money. No dividend, $2.7 billion. Marketed products, and this one caught my eye because sort of a cup, pulling back, squeezing here with multiple edges coming together. maybe about to run again. Everything turned green. That's Alkermes. I like biotech. You can tell I spend too much time here. Other things here that I thought were interesting. Let's see. I want to look at refiners because they are all over my buy list this week. And I'm not sure which is the best to buy. And they're all pretty much paused to refresh. I think I like number 2, 3, and 4. So let's take a quick look at them and I'll tell you what my thoughts are. This is the story. They've all had a very big run. Holly Frontier ran up. They've gone sideways to pull back to the 50-day moving average, and I think they may want to run again. Some earnings per share coming into Holly, not that exciting. Elan USA is another refiner, and also they have gas station markets, gasoline through gas stations. I like this. It's gone sideways for a couple of months, and then what happened on Friday? Huge volume, big kahunas, a pocket pivot, and running again. And I'm looking at the earnings per share, and I see some expansion coming in. It trades at a multiple of 28, and you could see a big bump up in earnings being projected. Now I would go to FinViz, and I would take a look and see if there's anything here. On August 8th are earnings, so the earnings are already out, so I don't have to worry about that. And was there any news this weekend? Oil and gas operation stocks make big moves on October 5th. I don't know if they made their big move because of the, I don't know what this ad is from. As I mentioned, that there were some issues with refiners and some supply issues, and gas prices spiked. They would make money because of that. Delek U.S. Holdings has been one I've been in and out of. We've talked about several times. Same story, massive earnings coming into the stock. Pocket pivot, big kahuna, kicker, somewhat of a kicker on Friday. Mostly green. This was red here from the pullback. The long-term bongo has been green. And then you look down here at Western Refining. Again, sideways, squeezing of a couple of 3 to 8 to 17 and the 50. Kahuna coming in on Thursday. Big earnings coming in. I think these guys are going to pop, and there are a number of refiners that showed up in my analysis this weekend. And anything else that I want to look at? Regional things, computers. Yeah, this was an interesting story. Some of the coal stocks made a move this week, and I'm not sure I get into them. You notice the 200-day moving average. You notice what happens when this pulls up to the 200-day moving average. It hits resistance and it falls. These guys had a pop because of Romney's performance in the debates. And there's no question that if the Republicans win, they'll probably loosen some of the legislation around clean coal. And you could see that even with a pocket pivot earlier in the week, these things remain in a downtrend, and you buy these at your own risk. They're certainly not high growth stock investment stocks. You might be bottom fishing, but they're not the stocks that I want to be buying. This one looks a little bit better. I don't know this one, PBR Partners. Pays a huge dividend. That's interesting. Just do a real quick look-see. 300,000 shares on a, yeah. I mean, certainly the dividend of 8.3% makes me look. It's only got 1.3% institutionals holding it. I'd pass on this one, not my kind of stock, but at least it's above the 200-day moving average. So nothing of interest there. Back. Yeah, none of these are stocks I saw. All right, So that's some of the place where the market is showing positives. And we're going to look at some stocks, some additional stocks in a couple of minutes. How about on the negatives? So oil and gas exploration, gas had a tough week, so these gas stocks were down. And you could see, as I talked about, the USO kind of looking like that as well. All it takes is one airplane dropping one bomb over Iran, and this changes very quickly. Encana, EOG, you know, people don't believe in top-down analysis. All these stocks in the same sector have the same basic pattern, which is because they are going to act the same way. And you can see, although some, like this one, has been in an uptrend, no earnings per share growth, very bearish-looking days on Friday, in a group that's doing poor. Anything else to point out here? Oil and gas services got hit as well, with oil down and gas down. Gold, which was a positive last week, early in the week, a lot of the gold stocks taking a hit, and you'll basically see all of them with a similar pattern of sometime late summer bottoming, having a nice run, and now getting kind of heavy looking and starting to go sideways and potentially rolling over. Yamani Gold is going sideways, not much in the way of earnings per share growth. Harmony Gold, some earnings coming in this quarter, but a stock that's beat up. The one that I like that I'm owning right now is this guy, and it looks just like AUY's chart, where midsummer bottom has run up here, weak on Friday, big kahuna on Thursday, pocket pivot on Thursday, week daily bongo red, consistent with this going sideways piece. Here's what excites me is it's still got some earnings growth potential, and it's a relatively small stock. So gold doesn't look that exciting. Let me go into my stock finder real quick. Let's see if we found some places with divergences. So if I look at all right. So from 29.24, so you got 55 divergences. So let's just quickly look at some of these divergences and see if there's anything look like potential shortable. So you'll notice when I say a divergence, you'll notice that you made a higher high here than back here, yet the MACD is going the other way around. And so I scan these in a number of programs. High and MACD dropping, and I look for these divergences. And I look for something that looks like it's a short or a buy. So what I will do when I'm looking is I'll start to go through these and looking for things. So I don't know Cooper Company, but I see that their stock price went from here to here. Stock does this. Whoops, I don't want to touch that. Let me go back to here. Well, at the same time, their MACD does that. That's a divergence, and I have found that the MACD divergence is a leading indicator, and this might be one that I might want to consider for shorting. Just see if anything else. Cornerstone is another one that I looked at this weekend. Let's see. So I could look at potential shorts there, or I could look at positive divergences and looking for stocks to go down. One of the things that I like to do is get a gestalt if there's more positive or negative divergences. So let me just look in this program here, and let's see if I can get this to go right. So in the overnight futures, a bullish divergence, which is positive on the dollar, what does that mean? That's bad. If you're long the market, because the dollar going up typically will pull the market down. They'll pull commodities down with it. AMD and Dell with bullish divergences. Let's see what they look like on the chart. So here's AMD. And, you buy these things at your own risk, but you look at the drop in the stock price, and this is ultimate divergence, a different type of an indicator, but it contains a number of indicators together, and you could see that it's not making new lows while the stock is making new lows, and that might signal that these stocks might be thinking about turning around. If you look at divergences on the bearish divergences, you could see many more YG, so I believe that's gold, showing a divergence. And again, price higher, the divergence histogram not higher. And then Gilead, Glaxo, Lilly, so some of those pharma stocks looking like they're having bearish divergences. Again, I find these to be leading indicators, and I scan lots of stocks every night looking for these divergences to help me in what I do. I look at the IBD 50 and other things, again, looking for stocks getting higher and the oscillator in the MACD not going too high. Let's see if we got done here. Almost done there. Let's go back in here. So now we've done some top-down investing, and we've identified where the strength is and where the weakness is. There are other things that I do as well. One of the things that I do is I do that group inclusion report, and probably got about 10 more minutes, and I think my dog's going to need to go for a walk. And when I do a group inclusion report, I try and find what stocks seem to be making it into most of the positive groups, and this is where some of the strength was, and I'm going to look at the best of these in just a couple seconds. TCBI is a thrift in Texas, which I have been talking about for quite some time. Transdigem is just an expensive stock that keeps getting more expensive. Homeowner's Choice is the leading stock in the database. It doesn't have much earnings growth, but what a beautiful chart. We'll take a look at that. Here's Celgene we looked at, an auto dealer, Lithium Motors, Altasource. God, I missed this puppy. This one's had just a monster run. And what these numbers here is, it means these were in 17, 18, 19 of the different smart groups that I scanned looking for the best stocks. And I'm not going to go through the technique because I do that every week on this. But I found a number of stocks by going through there. Refiner. It gives me an idea of what's working. And in fact, let's take a look. I put those in a group, and that group is called the GIF All-Stars. And I'm going to see if I can figure out how to do this. I haven't done this in a while. I guess I have to go into the warehouse view here. So here's these GIF All-Stars. And we'll look at some of their charts in a second. And let's make sure I got the ranker. I'm going to put them in by scorecard view, which is a mixed fundamental and technical. And I'm going to look at probably the top 10 or 12 in a second. And then I'm going to point something out first. So if I do this, and I want to break these by industry, I want to put these in industries. So we can take these stocks, and you can see the majority are 8.47 were internet software. We got data processing, oil and gas refinery. Let's put it into sectors, because there'll be less sectors. So we've got a lot in consumer discretionary, information technology, healthcare, energy, not much of staples. Materials are down to just 5.0%. So that, as I looked at stocks, that was the breakdown of where they're from. And so that number one group here is consumer discretionary, and you can see it identifies some of those stocks right up here. And I'm just looking at the GIF All-Stars, so those 60 stocks, 17 of them come from this list. And a lot of the things that you're probably familiar with, Cabela's, Conn's. Conn's is interesting, of furnishings, electronics, retailer, so that goes with explosion of the housing. Lennar, a builder. Lumber liquidators, Meritage, Select Comfort, you got to put beds in those new houses. So a lot of things that are built on that housing industry are supporting so much, are leading, which tells me the underlying housing recovery is probably stronger than we realize. Trex is another one. They make a lot of the stuff used for putting your decks. So as I looked at some of the GIF stocks, let's just go through the top 10. Just take a look at where some of the top stocks in the database. Here's Homeowners Choice. No earnings per share growth, although it had great earnings coming in through June. I'm in this stock, and I will ride it until it takes itself out. I'm a little nervous about the slower earnings. Everything is green. What a beautiful pattern, clearly in an uptrend, probably near a point that it's going to pull back, and I'm not recommending it for purchase on Monday. Select Comfort, this one gave us a gift when its competitor, I can't remember what their competitor's name is, it's not Serta. One of the other, Tempur-Pedic had a bad announcement. The stock pulled back to 19. It's nearly doubled since that time. It's got great earnings per share growth, trades at less than its growth rate of PE, less than its growth rate, which I like to see. Pulled back, looks like it might be getting ready to run. Calumet is one of these refiners that I like so much, and they all have had some nice earnings come in. Not much this coming quarter, but looking to pick up going forward, and certainly a very strong stock and a leader. Delek, we already looked at, same story. Refiner, not much this quarter. Next quarter, a rocket ship. Celgene was that biotech, which is my favorite in the biotech and pharma space, although it may be getting expensive. Lennar, we looked at earlier, was a builder. So many of these stocks you've already seen. Watson, that generics manufacturer in the pharma, we already saw. Here's Cons. Don't know anything about them, but it's funny because I thought they were electronics, and with Best Buy and having challenges and CompUSA being toast, it's interesting to see that the company is doing as well as it is. Computer and electrical retail, home office furnitures, everything turned green, had pulled back to that 50. Looks to me like a nice time to consider the stock. It trades at a multiple of 27, and it is the small stock. Market cap's $818 million. Larry can buy it, the whole company on a good day. Just kidding, David. And has pulled back. This looks very viable to me right here. Good earnings per share growth, and I think it is a play on the housing recovery. Texas Capital Bank shares, what a tight-looking stock. Certainly going into this next quarter, it looks like it's got good earnings. As I pointed out in the past, the second quarter out, the earnings are a little bit less predictable. Multiple of 19 does not pay a dividend. Certainly, what a beautiful pattern, probably more room to go. Alexion has been the big beast in biotech. Can't be much tighter and much more attractive than this stock. Its earnings growth rate, I always wonder if it'll support a multiple of 80, but every time I think the stock is expensive, it just keeps on going. Nice to buy the stock when it pulls down to that 50-day moving average. It's not up to the top of its high jump. Trex is that company that makes some of the outdoor stuff for the porches. Yeah, sure, it's late to buy it. It went from 26 to 34, but my goodness, look at this earnings per share growth. Remember those pharma earnings? Huge earnings per share growth. Trades at a multiple that's pretty high, but much less than its growth rate, and a very nice move up. And you could set your stop right underneath that 17-day moving average, and that looks very pretty. And we'll stop right here on this. What I do every weekend is I go through hundreds of stocks. I put together a buy list. Sometimes I put the buy list up on different boards. I look at the buy list in different ways. I look at stocks that are broke out, and I call my breakout all-stars because they are leading the market up. And let's take a look at CalAmp, C-A-M-P. Stock had a huge move next week. I think it's got more to come. CAMP, and you can see how it pulled down to its 50, had big volume of kahuna, and it's running. It's run a lot, all green. Look at this earnings per share growth, and it trades at a multiple of 22. Kramer says he'd pay up to twice the multiple, twice the earnings per share growth for a multiple. I would say this stock is very undervalued. I think it's got history of why it has such a low valuation. Armstrong Worldwide, AWI, is another take on the housing recovery. I believe they do floors. AWI pulled up above the 200, held, pocket pivot off the 200, everything is green. Earnings per share growth turning around from being crappy, and if it makes these numbers getting very strong 2 quarters out, although less reliable, trades at a PE of 22. The reason why I like this, look at the industry strength or group strength is huge. You can set your stop right below that 200-day moving average at about 47. You could probably buy it at 49. It looks to me as something low risk, and it may be very supportive or be pulled ahead by the market going up. In my leaders that are extended or gone category, I put things that have had a big run already. I showed you Homeowner's Choice. I showed you Celgene, Lennar, Watson, Medivation, Trex, Alkermes. Here's one of those insurance stocks that looked interesting, STC. I don't know anything about these companies. The ones I do, I act like I know it. The ones I don't, I tell you I don't. Don't know anything about this. Don't I know how to value insurance companies. But all I know is huge earnings per share growth coming into this stock. It's run up, it's gone sideways, and is it getting ready to run again? Trades at a multiple of 20. It has a dinky dividend that's meaningless, and based great earnings per share growth. I thought that one was a compelling picture. Pullbacks ready to run. Delt, DK I showed you, ALJ I showed you. I don't like Pier 1. I like their chart. Take a look at Pier 1's chart. Whoops, wrong button. Sorry about that. And let's take a look at Pier 1. Pull back to the 50, pocket pivot, multiple big kahunas. This is a pattern that when I see, I get excited. More than one big kahuna in a week, or kahuna in a week, in a day, I mean, consecutive days, and a pocket pivot, a big gap up. You know, next question is why? So you go to the web. Let's take a look at FinViz. Did they have earnings? Was it same-store sales? I know that's probably same-store sales. Pier 1 imports, other events. Well, I know same-store sales came out on these stocks on Friday, and that may have been the driver. I don't have time during this call to go through those things. And so I put this list together, and I guess if people email me at mdonk@mindspring.com if they really want to look at my babbling list, I'm happy to share it. 2 bottom fishers, and what I define bottom fishers, I'm not buying these now, but I'm going to look at them because I have a feeling they're about to change. One of them was Baidu. We looked at it before. It's really basing down here. It's got earnings per share. It trades at a multiple of 30. I think we all know Baidu. It's not a buy yet, but I just wonder if it's not at a point that it's going to move up from. I will watch it. It's certainly not a growth stock today, at least a pattern. And then Lam Research, I've got to figure out more about this stock because it's clearly a bottom fish. It's not a pattern I want to buy, but is it about to go positive on earnings per share growth, and is this something to pay attention to? And I shouldn't even show you these because I don't want you to think these are buys. But I accumulate a list of stocks that I want to look at and see what happens. And I want to point this out because if you do request my buy list tonight, I don't want you to think that I'd actually buy a stock that looks like that. And then the other one I want to show you, a couple other was Verifone and Tango. Look at Tango as stocks that may be getting ready to turn around. TNGO had been a cha-cha-cha stock. It fell down. It's based. It had a pocket pivot and a kahuna come in. It's got earnings per share coming back into the stock. Now, this might be setting up a wonderful ping pong type setup where it's going to run up to that 50-day moving average and bounce down. And it's from $13.50 to $16.53. It's about 25–30% move if it goes up to that 50. And I may play this one. So this is a pullback. And the reason why it's not the same as the bottom fishers is it just had a kahuna, a big up day getting above the 17 and the 8-day moving average, and a kahuna. And the other one that was similar to me was Verifone, which fell because of the boxy thing that you can plug into your iPhone. And when I take taxis, when I charge things, I'd much rather do that than do it on paper. And they used to do the taxis. They still do yellow taxi, way below the 200, so it's not the kind of thing I typically buy. But I'm scratching my head, multiple kahunas, big volume, moving up here, starting to turn green there, something that I'm going to watch, although it may not be one I buy because it certainly doesn't look as attractive as some of those refiners. So lastly, I want to go back to my stock charts here and just to get an idea of are there any longs to divergence. Just very quickly, I'll go through some of these. And you see, now you see the opposite pattern. You've made a new low, but compared to the last low, so let me do my line, stock price is down, and you go from, whoops, and the MACD histogram is not down. So that is what becomes interesting. So is this an early signal there? Well, let's take a look at Caesars Entertainment. I guess I can figure out what they do. And it's just because they're divergences don't mean they're buys. So it's a bottom fish, but it's got a divergence, which means it's probably something I throw in a box of stocks that I just look at on a daily basis, because those divergences often, as I said, can be leading indicators, but they can be several days or weeks early. I use it just to get a sense, and you can see there's a lot less positive divergences than negative. One thing I often do is I'll go to a small list. I will go to components. See if I can find what I'm looking for. So they have 239 industry groups. So right now it's running let's just see how many, are there any positive divergences in industry groups? While that's running there, that won't take too long. We'll look at that, positive divergences for groups. We'll look at negative divergences for groups. And then a few people asked me to talk a little bit more about that never lost trading. And then I'll say good night. So I'm going a little bit long. I apologize, but many of you folks are probably just listening to this as downloads from either highgrowstockinvestor.com, one of the other sites that I put it, or YouTube. You can just hit stop whenever you want to, so I don't feel that bad. And again, please, if you like this, please let people know about it, because as long as people watch it, I'm going to keep doing it. When I get the sense that people don't really care, I'll probably stop. So positive divergences in industry groups would be a none, and negative divergence in industry groups, let's see if we get any of those. At times of dramatic market changes, you start to see almost a piling on effect with a lot of divergences one way or the other. Well, that's cooking. I'm going to drop into TD Ameritrade and my never lost trading. And what I put up here, a lot of people go to me, Jeff, you show so many stocks. How do you watch all these stocks during the day and then figure out when to buy things? So I have to use some employees, and these employees are tools. So let's take a look at AWI. We go back in the HGSI stock. If you remember, this is that Armstrong Worldwide that I thought was interesting, that I thought perhaps it was going to run again as some of the other stocks that support home building are. You can see it had a big pullback earlier in the year. And so let's say I'm interested in buying it. So if I was going to buy it, I'll buy it if it gets above the high in the day. And I'd probably put my stop not much below the 200. So, but I'd rather buy options than buy the stock. So I loaded it up and never lost trading in Thinkorswim using my never lost trading indicators. And it actually says it has a buy on it if it goes above 49.46. So I would then go into my trade. I'm going to go back to the chart. I'm going to try and remember 49.46. And I'm going to look at some November options and look for some delta 35s. And decide whether or not there's some options that make sense. And this is your own preference, and everybody's going to be different on what they like to do and what they don't like to do. But I like buying delta 35 options that are a little bit out of the money and are not very expensive. So it's got to, for me to be interested in the stock, it's got to go above 49.50, and I can buy $50 options for $240. So what I'm going to do is say I'm going to buy those. Let's say I want to buy 30 of those, and I'm willing. Am I willing to pay the $240? Yeah, I'm willing to pay the $240. I'm going to go into here, into Thinkorswim, open this up, buy 30 calls at a limit of $240, but it's got to get at or above $49.50. And then I'm going to hit OK, and then I'm going to hit confirm and send. So that says I'm going to buy 30 of these calls tomorrow, December 50 calls at up to $2.40. The stock has to trade at or above 49.50. My break-in is 52.40. Maximum profit infinite loss is 7,200. And I hit send. So now I don't have to do anything. Tomorrow, if the market opens up down, I'll never trade above 49.50. If it opens up down and trades up, I might get above 49.50. If it gaps up the market, I won't buy it unless I can get it at my $2.40, and I'm done. I don't have to worry about that. And one of the things that I do at Never Lost Trading is I load my watch list into a market watch scan. I also have these for HGSI indicators. And I look for this last column to turn 1. Because when the last column turns 1 is when I start to get interested. Remember that CAMT that I said I need to know more about it, but great earnings per share growth? Let's take a look at this one. And if it doesn't show a buy as well. So it had a buy earlier in the week if it got above 824, and you'd be long in it right now. But basically, and that's why the 1.0 is there, because it's currently a long. I am scanning multiple watch lists during the day, looking for stocks that have got a 1 or a -1, which is not a good sign. And there's none of those. These are the buy watch lists that I came up with today. And as you can see, it includes a number. IFSIA was another one that I thought was interesting. And it's got a, all right, so it's telling me that if it trades above 1457, it's a buy. So I would probably do the same exercise on this guy and potentially consider a buy. This is like Armstrong Worldwide, same industry, frankly. IF. Interface. Look at this stock. This is one of the other ones that is on my, I think this is a pull, I call it pullback ready to run right down here. And the reason why I call it a pullback ready to run is deep pullback, big kahuna, volume, and a pocket pivot turning green on Friday, this guy's going to run. And so it's interesting that not only the HGSI indicators and tools that I use said it's going to run, that so did my thinkorswim unrelated indicators. And the never lost trading, which is something I really like a lot, really looks at big money, and you can see that the arrows are all going in the same direction. There's a lot of reasons why I might want to buy this stock. Let me just look at one. We actually, I'm trying out a simpler version without as many indicators that he's now offering. Let's see if this doesn't look that much simpler, does it? Let me get IFSIA here. So again, this one had a buy a couple days ago, but this is a stock that I'm very interested in. And what I would do here is the same type of a thing. So it's, I look to buy if it goes above the high of the day. So it's 1457. Let's look at some January 15s. Yeah, I mean, I kind of, you know, these are the, I like to have some things that I'm shooting for a big return, and I'm willing to put a little bit of money at risk. So this, I'm interested in paying up to $1.25 if the stock trades above the high of the day. So if it gets above 1457, and I could buy 15 January options for $1.25, and I might even cheat and buy them sooner. I can get the buying power of this stock through the middle of January for a little bit over $1. And if I'm correct, and if this stock is truly making a move, what's its upside going to be? And I haven't done that analysis, but I'll do some of that after the call's done. But my upside's probably $20 if the stock makes a move back up. Now, obviously, that's a huge move. But even if I get up, because there really was no base here, and it's at the top of where it's been range-bound since its big drop, but and I'll do some math and see what I think this stock is worth, but it's making earnings. I'm interested in this, and if I could get it up to 18 and put $1 at risk for a $3 return, I'd like to see that. But just something that I'll play with on my own. Last thing I want to show you is last week there were a number of things that I mentioned that might be viable. Some were the home builders, and one was a finance stock. What was it? See if I can remember the finance stock, because it had a great week. ACN, ANC, oh, geez. I had thought about it earlier today, and I wanted just to point that out. And one of the problems with, you know, not problems, sometimes stocks that look like they're expensive just have a tendency to get more expensive over time. And this was a stock that I put out last week that I just loved as a finance stock. And I can't remember what its symbol was. Finance and mortgage stock, and it just had another huge run this week. So I guess since I can't tell you, I can't tell you. Let me just see one last thing I'll look at, and I've gone way too long. Let's just see on the, we got negative divergences on the internet, sporting goods stores, I think Dick's, drugstores, retail, CVS and Walgreens, information technology, and air services, other transportation, whatever that is. Oh, I am just about done because it's time to be done. Well, I give up. I can't figure out what that was last week. But last week we did talk about several of these stocks. We talked about Camp, Celgene, FTK, which just rolled over horribly on Friday, and I said I got out of it. Thank goodness. HGSI, Jazz had a good week as well. I guess on that note, ACN, ANC, I can't remember what that was called. It was a mortgage and thrift that just had a OCN, ONC, let's see, let me just check one thing. Just had a great week, and I talked about it and said how it had a great run, that I was concerned about it because it was getting expensive. Here it is. And we had the call on Tuesday, and I pointed out the stock, and then big gap up on Wednesday. I think they did a little acquisition that the market likes. So even when a stock looks like it's had a big run, it can still go higher, and now it's up near the top of the high jump. So even after that big run, since it was a gradual run, it didn't get spread away from 17 or 50. It wasn't twice the 200 until now. It really wasn't near the high jump bar, but it's there today. So have a great week. If you're interested, just email me for my buy list. I will put this up on multiple places. Please tell your friends. Please post it on other boards if you like it. And as long as I have people watching it with any number, I will continue. And have a great week. Have a good night. And God bless. Thank you. Bye. Hey, Gary, hold on.